look, no doubt this is an extreme technical blip that we've seen, right? Because we're so close to rolling over and the expiry of the contract for May on Tuesday. But is there any indication that things will improve, or do we expect then that this signals further volatility to come in future contracts?
I agree. I think that there was a technical blip in the sense that you had one fund or maybe possibly multiple funds that weren't able to exit their positions because there are no buyers on the commercial side. Refiners, utilities, and airlines are not buying. But we're really also running out of storage. So I think that there is negative read-through for future contracts, such as June and beyond, to the extent that there will still be no place to put those barrels either, unless U.S. producers shut in production at a fast enough rate and the economy opens up. But we're a little bit dubious about the economy opening up quickly, because even if there is positive news on coronavirus, we think that governments are going to be very slow to open up the economy for public safety. And I think that a lot of consumers are going to have shifts in their behavioral activity. People won't be as anxious to drive and to go to work if they can work from home. So I still think that there's downward pressure on the June contract, even though the severe sell-off that we had today, dipping well into negative territory, may have been a blip that was, as you said, related to something technical from one or two funds.
Right. So in terms of the reverberation that we see across the related industries, right, how much of that fallout would you expect to see, given that we've already had, about a third of Europe's rigs that have shut down already? Is there more destruction on the supply side to come?
Yes, I think that the oil market will be forced into a state of rebalance. So, we talk a lot about these historic OPEC cuts, and, we're talking about the potential for the U.S. to impose tariffs on foreign oil and all sorts of metrics. But really what will cause the market to get into balance, it will have to happen, is market-driven cuts. And those cuts are going to come from producers that are going to see that prices are uneconomic to drill at. But not only that, but also that they don't have any buyers and they don't have any place to put the oil. So producers in general are pretty loath to shut in wells. It's value destructive to do it. It is expensive. It causes permanent damage to the wells, and in some cases they cannot reopen those wells. But eventually that will happen in sufficient enough quantity, we think, up to 3 to 5 million barrels a day, such that the market will rebalance ultimately when the economy reopens after COVID.